All right. All right. So welcome to our last lecture. This is week 6 of the 6-week lecture series. Today we're going to go over some of the careers in finance and some of the basic things that you need to do right now to actually start trading. So that was kind of like the whole goal of this course, was to actually help you or give you an introduction to the topics needed, just to start giving you some analytical skills that you're going to need to practice. Also just, some of the financial terminology that you'll need to know. But today we're really just going to go over really the learning process on like what you really need to do right now, to start trading as soon as possible. In the last part, we're also going to talk about your goals. This is not going to really come up in the slide, but we're going to talk about a little bit about where you should set your goals. I mean, you want them to be very ambitious, but at the same time as realistic as possible, especially when trading. When trading is, to some people, a gambler's game. So yeah, we'll talk a little bit about that towards the end. But here we go. Let's get started. All right. So first, we're going to talk a little bit about pursuing a career in finance. So there's a lot of different careers in finance, but I just wanted to focus a little bit on a few of them, or on a select few of them. So before we get started talking about actually going into the field, let's talk a little bit about the education. So there's a lot of different paths going into a career in finance. Some of the common paths include people who already have like an interest in finance, like they already decide, oh, with my major, I want to be finance or economic related or oriented, so that in the future I can pursue a career in the realm of finance. So for them, that might be what is that? A BA or BS in economics. So it could be either a bachelor's of arts or a bachelor's of science in economics. It really depends on the school and kind of how the approach to economics that that major takes. So it can either be a very theoretical stance, or it can have a very practical stance where you're focusing really on the macroeconomic principles that really actually drive markets. You take a close look at things happening right now. So that's kind of what you would expect in economics. However, with a bachelor's in business administration, you would probably want to get a concentration in finance. So this type of degree is offered at UW and NYU for their Stern School of Business. So as I said, this is an undergraduate business program sort of route. Not all schools actually have an undergraduate business program, although they might have a graduate business school. So you want to do your research in the future for what school when you're applying to schools, which school actually has an undergraduate business program, and which schools don't, or and if they don't, is their economics program strong so that you can actually pursue a career from finance thereafter. So these two are pretty common paths. However, a lot of people in the field actually do not have a pre-made interest in finance. They actually have perhaps a major in psychology, a major in science, or a major in engineering. Sorry, I meant in a sciences such as like biology or chemistry. But there's no really one path into finance. That's just simply because a lot of the thing, I mean, basically every single useful human activity requires financing, right? So every business needs financing, even a nonprofit business does, right? So you need to actually, every single firm is in demand of financial professionals. And because of that, for firms that are maybe more focused towards biomedical, they still need people who are into finance or who are professionals in finance, but they actually might need people who are also specialized within the field of, for example, biology. In that case, these are actually just a few examples of different majors that people kind of leeway into a career in finance. But I actually mentioned a major in psychology because a lot of the financial markets, which I actually kind of talked about all throughout the different lecture series, is that the markets are driven by emotion. So if you have a major in psychology, or I'm guessing if you had a major in psychology, you would have a pretty firm understanding of how the human brain works, how we think, and how we react to certain scenarios and things. So, with this type of knowledge, you would be able to make a very good parallel or follow information paralleled by behavioral economics. There's an entire study based on economics on the behavioral side, that being, people who are, or the influence of human psychology on the markets and, how they're kind of intertwined. There's a whole study dedicated to that. So yeah, there is not one single major pathway into going into finance. However, if you want to actually have a pure finance route, I definitely recommend getting a bachelor's in business administration with a concentration in finance. And for the most part, a lot of people in undergraduate business programs, they actually double up on concentrations. So it actually might be finance and marketing, for example, or supply chain management. It's like it's a really there's a really extensive list of ways you can go in an undergraduate business program, but a lot of people who are just into finance, they double up a concentration in finance with another concentration. So yeah, your educational path will be and should be determined by your career goals, and it should be generally focused on a specific area within the field. I mean, a lot of people do say that when they go into college, they're actually looking for their interests. They want to see what they're into. But moving forward these days, there's so much competition, as you guys know, even just within high schools and stuff. So you actually want to be as specialized as possible. Companies don't want to hire generalists; they want to hire specialists, people who have a pretty good, and this is in general, people want to, or companies rather, companies want to have people who are specialized within a specific area. Like, they don't care if you can do the job that someone else or 100 other people are already doing. So yeah, just, specializing in something is probably your best bet towards making it into those great big bulge bracket firms, or, eventually reaching a high place on the corporate ladder. So this is all just coming out of education. I mean, I might be exaggerating it a little bit. Education is really the start of pursuing a career in finance. Okay, so beyond undergraduate education, which is really the only first part of pursuing a career in finance, a lot of people actually pursue an MBA. So what is an MBA? An MBA is a Master's in Business Administration. So it's very commonly pursued. So this is a part of graduate school. I mean, it's usually only a 2-year program. There's some accelerated programs that can be actually taken online, but the MBA program usually is 2 years of full enrollment, where you're actually going to the campus and yeah, studying there. The accelerated programs online, however, those actually take between 11 to 16 months, I believe. And usually when people pursue an MBA, they actually have 2 to 5 years of workplace experience. So that's actually required. It actually depends from school to school, how many years of work experience are required before you actually pursue an MBA. So an MBA is really important if you want to actually climb the corporate ladder. I mean, a lot of people actually don't get an MBA. So you'll actually see a lot of people in the perhaps board of directors. That's actually not 100% related to finance, but the board of directors or management of a company. A lot of them will actually have MBA after their name, meaning at one point during your career, they actually decide to go pursue an MBA. But for many companies, the company will actually sponsor your enrollment for an MBA. So why is that? Well, they actually want to incentivize you to continue working there once you actually receive that further qualification. So they might actually sponsor. Yeah, so an MBA really, I mean, I obviously haven't gotten an MBA yet. I'm still in high school, but an MBA is really just a general sort of qualification for everything related to business. So, I mean, obviously within your MBA, you might be focusing on one specific realm of business, finance, economics. However, the thing is that you're going to actually be interacting with other people who have different interests, who are in the same MBA program. So, getting an MBA will probably be down the line for most of us here. But really, what we're thinking of when we're getting an MBA is just, moving up in the corporate ladder, furthering your education beyond undergraduate education is probably very important, because undergraduate education can only provide you so much, within those last 2-3 years where you're really specialized in your major or your concentration. For example, at a business, undergraduate business program, there's so much more that you need to learn. So these actually, what we're going to next, Chartered Financial Analyst, CFA, Chartered Financial Planner, CFP, and Certified Public Accountant, CPA. These are all different qualifications that are actually offered by organizations. So the CFA Institute, for example, they actually provide this certification, the Chartered Financial Analyst certification. But basically, these are just qualifications, different qualifications in different realms of business finance. So for CFA, that is a qualification in dealing with large scale corporate operations. So, when we're thinking of CFA, we're thinking about corporate finance. We're not thinking about personal finance, dealing with people's own individual finances. That will be more leaning towards a CFP, meaning a chartered financial planner. In this case, this is a qualification in dealing with different individuals' finances. So more of like the financial advisory sort of realm. So if you were like a financial planner, for example, or I mean, it's really in the name. If you're a financial planner, there is a high likelihood that you would want to pursue CFP, or at least have people within your advisory board who actually have that certification. And lastly, a CPA is a qualification in dealing with taxes. So that I actually made that really general. So when people actually file their taxes, I'm talking about personal taxes, right? So like for example, income tax, you actually have to go through a CPA. So this person will actually, or you don't have to, but the CPA will actually go through and manage your finances or gearing towards the taxes side of it. But CPA is the qualification needed to actually deal with those. Yep. So these three are actually only a few of the many different types of financial slash accounting, you know, certifications. Except these are actually three of the major ones. All right. So there is a line, believe it or not, between finance and accounting. So how Google defines it is accounting focuses on the day-to-day flow of money in and out of a company or institution, while finance is a broader term for the management of assets and liabilities and the planning of future growth. So just based off of this statement, you can kind of guess that accounting is more, numbers based, just quantitative stuff, really nothing that has to do with the qualitative strength or fundamental strength of a company moving forward. It's really just, in and out, in and out, in and out, probably very tedious work. But finance, you're actually going to be dealing with growth. You're going to be dealing with qualitative and quantitative, different information, and actually have to, you know, take on reasoning and those down both of those routes to make your decision. So, accounting is more numerical focused. I mean, obviously, finance is very hard in terms of math, or actually not. No, don't mistake me here. Not very hard, but finance is not 100% geared towards numbers. You're actually focusing a lot on the fundamental aspects of a company as well. So that's not what you're going to find in accounting, and for that reason, I actually think that finance is a better general career to pursue over accounting. So the top four here, these are accounting slash consulting firms. We got PwC, Deloitte, KPMG, Ernst and Young. And under we have, I think, I'm not sure if they're the biggest, but nine very big financial firms, also investment banks, including Merrill Lynch, Barclays, Citigroup, Credit Suisse, Deutsche Bank, Goldman Sachs, JP Morgan, Morgan Stanley, and UBS. So yeah, these are actually some of the big banks, investment banks, that they cover all of the financial activity. Of course, they have their little own accounting sort of division just for themselves. But really, when we're thinking about finance and accounting, they're really two different things. So when you actually decide, do I want to pursue finance? Do I want to pursue accounting? You just have to make sure that that there is a difference, and you know what you're getting into. If you want to actually pursue a concentration in accounting, for example, at a undergraduate business program. So this is actually all tracing back to my advice to you in terms of higher education, right? Because that's the foremost first thing that we're going to be dealing with, or having to make a decision with, not dealing with. But yeah, so you really want to make that differentiation clear between finance and accounting. All right, so there's a lot of different careers in finance. Some of the primary being an actuarial career, accounting, financial planning, as I mentioned, investment banking, credit analysis, private equity, and venture capital. So I'm not actually going to go into all of these. I mean, it's going to take quite a bit to, just actually spill out information that you can easily find on the web. So if you're actually interested in any of these, I would suggest, just searching them up on Google. There's so many different resources that could tell you. People who've actually been in the field for a very long time, of course, there to speak about their work. These are all under, I guess, the category of accounting and finance. I mean, I guess accounting and maybe actuarial what is that, jobs go under accounting, but for the rest, they all go under finance. And when we're studying finance, you actually might be studying for all of these different professions. Yeah, so do some research online on which career path seems more fitting, especially fitting towards your personality or work ethic, because all of these different careers have different strenuous, or I mean, not different difficulty levels in terms of pursuing. For example, if you really want to make it up top in investment banking, you're going to be having to work really, really hard. Um, I haven't done that much research outside of investment banking towards like financial planning, for example, but it is definitely much less than investment banking from big firms. So yeah, we're going to talk a little bit about that. All right, so a lot of us, especially if you're into finance, probably have an interest in the money in the field. So let's just talk a little bit about the average salaries and the bonuses. So obviously, as you move up throughout your career, your salary or your compensation rather is going to change a lot. So the sort of progression that people take in investment banking specifically would be being an intern to an analyst to an associate to a vice president to a director or senior vice president to the managing director. So the last few actually sound like really big positions or singular positions like vice president, director, senior VP, and managing director. So there's actually a lot of those positions in a single company. There's not just one. So let's see here. So for the typical age range, let's take a look at that first. 22 to 27, 25 to 35, 28 to 40, which is a huge gap, 32 to 45, even bigger gap, and 35 to 50. So just interpreting this age range, you can actually kind of see that it really depends what age you're going to be in for each different position that you are actually getting into for along the line. So when we're thinking about finance, we're thinking about performance-based stuff. So we're not really considering our base salary to be the bottom line on in terms of how much money we make. In fact, a lot of people, which I'm going to get into in the next slide, actually make 30 to 100% bonus on top of their salary. So like 30% of their salary is given as a bonus, and then or sometimes even 100%. So basically doubling their compensation. So yeah, we can actually see a lot of growth in total compensation. For example, as an analyst, you might make 150,000 to 200,000, all the way up to being a managing director, where you're going to make over $1 million a year. Of course, these are all estimates, or I guess surveys based on a lot of people who are actually already in the field. And it'll also depend where you work. For example, JP Morgan itself has different branches all across the world, namely in California and New York. There's probably going to be a big difference in working on Wall Street versus working in California for JP Morgan, right? But you're working for the same firm. It really depends on what type of work ethic you want to take. It also really depends on how much time you want to actually spend in the investment banking realm. Really, a lot of people leave within that mid part of their career, or even the beginning part, where they're just an analyst. A lot of people, they call that monkey work, because it's really the very tedious stuff that's going on at that level. Only until you get to that, what is that, senior VP or managing director position, do you actually start transacting business that matters to the firm that you work at. All right, so how hard is it on Wall Street? So, if you're here, or if you're listening to this recording rather, you're probably wondering, how hard is it on Wall Street, right? Because if you're interested in trading and investing, you probably have a little interest, at least a little, on working on Wall Street. So Wall Street, specifically towards investment banking, it's not unheard of to be working 80 to 100-hour weeks. Just as a reminder, a 40-hour work week is the norm, so like 9 to 5, 5 days a week. The average American actually works, I think, around 34.5 hours a week, right? So less than the 40-hour work week. So if you're going to be working double, you're obviously going to need to have a strong work ethic. If you kind of look to the bottom of these pictures, you can see in the middle picture is the Goldman Sachs trading floor. So obviously it looks really crowded. I mean, it might be actually kind of demeaning to just be working alongside a bunch of people with the same goal as you, knowing that not all of you are going to become managing directors in the end. But when you're actually working here, the first step is to get out of there, to get out of the analyst or monkey work position. So I actually spoke to an analyst at JP Morgan. He said that the hours are realistically 60 to 80 hours, much of which are just spent around sitting around waiting for calls. He said literally just make yourself look busy. So, or making himself look busy, right? So when we're thinking about 80 to 100-hour work weeks, I think it's pretty much impossible for someone to consistently work that long for, more than like a year, maybe, or maybe not even, right? So a lot of that is really spent waiting for client calls. It the investment banking job, it really varies depending on the position or even who your manager is, like what firm you work at. So there's not a lot that I can tell you specific to the different firms. But really, when you're working as an analyst, or when you do work as an annual analyst, it might actually be kind of depressing for many, specifically because you're seeing or you're working alongside so many people with the same aspirations as you. And it's just a simple fact that not all of you can, become managing director, as I mentioned. So yeah, it can be both strenuous and tedious, which is why actually 30 to 100%, as I mentioned, bonuses are normally added to investment bankers' compensation. So for a lot of people, the money involved in investment banking is one of the biggest primary sort of motivators. But really, if you're actually just going in it for the money, you're actually going to need to have a little bit more than that to continue. Simply because if you're working 60 to 80 to 80 to 100 hours a week, it's going to take more than that drive for money to actually work at an investment bank, right? You actually have to have a passion for it. You have to be enjoying every day of work there. Maybe not every day, but at least generally accepting and liking your job. So, it might actually take a few years for a promotion. Someone who I'm actually close to is who teaches me math. He told me that one of his best friends was in investment banking for I think 5 to 10 years, and he retired right after that. And he's the same age as him, right? So that's pretty crazy to retire when you're around 30 years old. But really, if you really keep at it, if you get those promotions, if you really work towards them, it's really a realistic aspiration. Yeah, so always consider how hard you want to work. A lot of people, I hear so many different stories about people, and you've probably heard stories about people, one committing suicide. That's really horrible, but two, just quitting their job after all of their hard work right before promotion. Like you just really have to come into consideration in terms of all of that. But at the end of the day, investment banking is a job, right? It's not a strenuous task that someone gives you without compensation. It is a job, and it provides you, of course, the suitable compensation, or at least what I think is suitable. All right, so now let's shift gears a little bit away from the whole career in investment banking slash finance. Let's talk a little bit about getting started with trading. So let's go here. All right, so I mentioned earlier in our lecture series that we would be doing market watch. However, I found that using the platform or looking around on the platform, especially on the administrative side of the platform, it's really game-like. Obviously, it has the ticker symbols or companies of a real stock exchange. However, it's basically a game. So I recommend getting straight to paper trading. As you can see in the bottom right, that's actually Think or Swim from TD Ameritrade. That's their paper money application, and that is actually exactly what it looks like on a real trading platform. That is a real trading platform besides the money. So just to make that differentiation, trading games are facilitated on fake trading platforms, as in the bottom left, with fake money, and paper trading is done on a real trading platform with fake money. So I'll actually change the screen that I'm sharing from. Let's see here. So yeah, this is, I'm not sure if you guys can see that. Yep, so this is the screen for what is that? For TD Ameritrade Think or Swim. And this is actually real-time data with real money. I just, hit it a little bit on the top here. But this is what it looks like. So this is exactly what it looks like on the, what is that? On the real trading platform, or this is a real trading platform, and this is exactly what you're going to see on the paper money platform, which is basically just using fake money on the same thing. All right, so let's go back to the lecture. All right, so yeah, so paper trading, I recommend that you guys do that right away. I really think that trading games, obviously it's going to give you a little bit of the experience of buying and selling, but it's kind of artificial considering that real trading platforms are more intuitive based, and not simply just buy, sell. There's a lot of different indicators that you're gonna have to use. The charts look a little bit more complicated. So I really suggest getting right into paper trading. Okay, so I recommend that you guys take out a pen or pencil, and as well as a paper, but these are actually some of the things that I recommend doing right now. Specifically, this is the path I actually took towards learning how to trade. So get a Google account if you don't already have one. I mean, I'm assuming that you guys have Gmail accounts. If not, create one. And in the Google Drive, create a main folder named Trading. You guys can do this after a lecture, of course, but create a main folder named Trading. And within that drive or within that folder, I want you guys to create two more folders. Those folders being Learning for the first one and the Trading Journal. So this will depend if you're actually going to go straight into paper trading or real trading. That's really your choice. And third, search for a technical analysis course. I want you guys to be very focused on technical analysis, especially if you want to get into trading, which is really what this whole course was about. So this is an optional thing, but you can actually pay for certification on some of these courses. So for example, on Coursera, you can actually take the course itself without paying, but you're gonna have to pay for the certification. So next, when you're taking these courses, you need to take notes in your learning folder. So that's actually why you need that learning folder, so that you can take notes and actually have them all in one place. And use the documents divided by unit or topic. Don't actually divide it by which course it is. I mean, you guys should obviously take more than just one technical analysis course, but don't divide it by which course you're taking. Divide it by the unit and subject, because you just want to add more and more information to the documents that you already have, the knowledge you already have within that area. It doesn't really matter where you're learning it from as much as what you're actually learning. So this is a mistake that I made when I actually I think I took 3 or 4 different courses in finance, specifically geared towards technical analysis, a little bit of corporate finance, which is kind of useless in my opinion. But anyway, you want it to be as focused as possible on topic, not really as much towards which course is it, and like 1, 2, 3, 4, those are the lecture names. So I'll take notes in different lectures. No, you want to actually do it by topic. And the reason you want to do that for the next part is actually to review those weekly. So if you want to review them weekly, you obviously want to have all of the related information in one place. But if you review these notes weekly, you will actually start to get a sense or a feel of what it actually means to know this information. It might sound kind of weird that I say that, but simply watching those videos on the courses are not really going to get you anywhere. I mean, I know for a fact that myself, I took the financial markets course on Coursera. I probably forgot 80 to 90% of that information. And they say that you only remember a certain amount of the stuff that you read. And so even when you're watching videos, it's really hard to actually retain that information. So I actually recommend reviewing those notes weekly for the different courses that you take. And lastly, as the one that I showed you, download TD Ameritrade's Think or Swim platform. I highly recommend this platform simply because it's one of the most powerful out there. And yeah, so create a fake account for paper money. That's something you can do right away. You don't need a social security number. You don't need any of that. You can just make an account right off the bat. And in your trading folder, I want you guys to create a document called Trading Journal. So when you're making trades, you actually have a trading history tab where you can see all the transactions that you've made. But really, I want you guys to actually have a folder or a document rather that tracks your trading decisions. Not really just where you bought and sold at, but also, why did I buy? Why did you buy at that point? Where did you set your orders at, or your limited stop orders? You want to make sure that all of that is, or your system is set in stone, just so that you can be a disciplined trader, not just changing your rules over and over again. Yeah, and use each technical analysis skill that you learn in at least 5 different trades. Could be fake or using paper money or real, but document your reasoning, your buy sell price, and your limit stop orders, the price thresholds for them. Because simply monitoring whether you made money or not is not actually a good way to document how good you are getting at trading, simply because your system is really what matters, right? Because you don't really care, or you can care obviously, but making money doesn't really mean that you knew what you were doing. I mean, you could have been lucky at any point and just made money buying at a low and selling at a high, like, oh, right, I saw that, I'm suddenly a good trader. No, right? You want to actually document the reasoning behind making these trades. because we're looking long term. I mean, it doesn't have to be long term in terms of position holding, but we're looking for long term knowledge growth. You guys are likely going to trade all throughout your life, and you want to actually build a very strong foundation right now or as soon as possible. To make sure that you're not making any rash trading decisions in the future that will cost you a lot more money, a pain in the back, and So yeah, keep doing this, or continue rather. Keep going with all of the courses. Keep going with the paper trading. If you guys actually have any questions about paper trading, you guys are free to let me know. And yeah, so this is all that you guys need to set up right now. Make that Google account, get that drive, get TD Ameritrade Thinkorswim. So just get all of that set up and really just get right into it. I mean, there's no one really pushing you right now. I mean, you guys could say that I'm pushing you, but really what you want to do is have or find your own drive to start trading. So these technical analysis courses are a little bit boring in my opinion. I mean, unless you're really gung-ho about getting started trading, it's going to be hard powering through them, but that's actually why I want you guys to take notes. Taking notes just so that you can go back and review them, as I mentioned, every week. All right, so the whole learning process takes about 3 to 6 months. 3 months if you're dedicated and learn consistently, and 6 months if you aren't. So just watching the videos to get the certification, I mean, I guess that might be what you guys are thinking, getting that certification, putting it on your LinkedIn profile. That's not worth it. I mean, the certification courses honestly mean nothing in terms of actual qualification. So what you're actually going after in getting those or taking those courses is the applicable knowledge. You shouldn't really care about the certification. That was kind of one of my first mistakes in the first course that I took. I just wanted that financial markets offered by Yale on Coursera, right? Like I wanted that certification, and I really learned nothing from it, so it meant nothing. You actually want the applicable information because you don't want to go back and have to actually retake the entire course simply because you didn't pay attention. And that's actually where the notes come in, so that you can actually review the notes rather than watching hours and hours of videos over again. Also, online learning is great, but it's also difficult because it's easy to get distracted. I mean, I remember for me, I actually kept my phone with me while I was learning, and it was really easy to get distracted. I'd pick up my phone every like minute and be like, oh, did anyone send me a message or. So you want to actually keep your phone as far away from you as possible and keep only 2 tabs open. I mean, obviously, if you're learning online, it's easy to get distracted further and, what start surfing the web, but you only want 2 tabs open, your notes page and the online learning site. This will actually help you become the most efficient. You can actually write on a journal if you want as well, or on a real physical notebook. I recommended taking notes online. And don't bother typing up everything that the professor or teacher says. I mean, you can use the snipping tool. The snipping tool is great just because, you can actually take basically a mini screenshot and, you don't have to type up everything. It might make you feel like you're learning by typing up the notes, like you're doing something, but all you're really doing is hand-eye movements. I mean, likely without actually interpreting the information. So you should pay less attention to actually typing up the information and taking notes rather than just actually learning it face to face, like right there. It's better to learn right there than to just take notes and then not actually ever go back to them. So that's the important thing about notes. If you're not going to go back and look at your notes, don't even bother taking them. So you want to make sure that you're learning at least right there. And if not, have notes ready just so that you can learn later. And I'll actually send a tip and reminder document to just, what is that, clear up all of my advice. I mean, I know that a lot of this is probably coming out of nowhere, like, well, what are these courses? Like, why do I need to do a trading journal? But I'll send you guys a document following all of this or following this lecture. And really what it comes down to is effort and commitment. I mean, I'm always here to answer you guys' question. And if you guys have that effort and commitment, I'm always willing to help. Okay, I'll talk a little bit about TD Ameritrade Thinkorswim. I mean, I'm super passionate about, or I'm super insistent on you getting this application simply because it's awesome, right? So towards the left here, we have a little trading TV going on, right? We have the charts. We have actually 5 different charts on the screen. You can find them, right? 1 on the left, at the top, and 3 at the bottom. But this application is simply so powerful that it might take a year to actually learn all of its uses. I mean, you obviously don't need to know all of the different technical analysis indicators that we went over. But really what it comes down to is how much time you're willing to put forth to learn how to use the application. It might feel really tedious to be learning how to use the application, but not placing trades right away. But believe me, if you know how to use the application, it's going to come in real good handy or real handy when you're making your first trades, simply because you don't want to actually be figuring it out as you go. I mean, you don't want to find out later that you set the wrong type of order just because you didn't know where to set. I mean, what is that? Where to actually change the type of order, right? So I recommend learning this as soon as possible. It really comes down to your effort. This all comes down to effort, really. Just how much time you're willing to put forth right now, just to help you moving forward. As I said, if you have any questions, you can contact me through email. If you want my personal contact, I can always give it to you. But yeah, Thinkorswim, the most powerful and intuitive analysis and trading platform. Right. Thank you. So this concludes our 6-week lecture series, and I wish the best of luck for all of you with your trading journey. Yes, third time I'm saying this, but if you have any questions, feel free to let me know. Thank you, guys.